They opened up APIs, application programming interfaces, for the million-plus developers. So Stocktoberfest, anybody who wants to leverage the Apple ecosystem can connect to these Apple LLMs and create new AI applications with privacy in the Apple ecosystem.
Welcome, everybody. Trends with Friends. We've got a heat dome. Hey, here's a heat dome. I got a little heat dome brewing right there. We've got Phil Perlman in the house, Trends with Friends podcast. We have JC, no matter what the heat, the hair looks good.
What do you call it?
And we have a good friend from Houston, probably this.
What is a hot dome? Is that anything like a hot
That's
tua?
what they
Is it the same thing or no?
That is what the colonializers now call a heat wave. The colonizers call a heat wave. It's a hot dome. I just like the way it sounds. And it is a heat wave, though, JC. That's what we call it. And from the center of the heat wave, Houston, where the humidity is 140% today, is Michael Parekh. And one of our fave guests. He's our first two-time guest, I think. Maybe Rom. But I think he's our first two-time guest on the show, which says something.
Honored.
So Michael.
Three more.
That's right.
Jacket.
That's right.
Ooh, we need to have that.
We do. We got time for 5 timers.
Well, I'll
we
make.
Got time.
You got 2, but it's a long way to Stocktoberfest. We may present you with the jacket at Stocktoberfest. All right.
That's a great idea.
I'm getting excited about that event.
More.
I've got some great speakers. Also, outside of Mike for Stocktoberfest, everybody, October 20th to 22nd in Coronado, which is where you can see my house right now. If you see out back, you can see people crossing the border, Phil. That's how close we are to Mexico. And they're swimming they're swimming right behind me over the border with syringes and poison and rapists. They're all coming in.
Elon in the background.
Is that what?
Elon?
No, that's
Elon.
not Elon.
Yeah,
Elon. He's shadow banned. He's shadow banned the whole island when he found out I was here. He's totally shadow banned the island. So, so a rare glimpse of my house. This is the new house, JC. You guys got to come.
New house? You moved?
Come see it.
No, you renovated.
No, same house, but we had to redo it. We had a little bit of a flood. I think Elon probably had something to do with that strange water burst. Michael.
We'll see it in October.
So anyways.
We'll see it in October.
You will see it in October. Well, Phil, maybe not you, but Michael, JC, open invitation. By the way, speaking of heat dome, that shirt is not going to age well this hour, I don't think. That looks very sweaty, that material that you're wearing, Phil.
This right here? This is
that terry cloth?
Primo, man. This is like grade A. I don't know. I had it in my closet. My kid, I have to wear a nice shirt today. Okay, my kid graduates today.
Is that a small?
And I have to wear a nice shirt.
Kid graduates today. It looks like he bought that at Abercrombie and Ditch. What size is that? Yeah, Jesus. Is that a small?
Medium.
Can you just?
No, it's a medium, man. It's a medium.
It's a husky medium. Medium's impressive. Okay. We were talking earlier that I'm going to promote myself here. JC said he saw pictures of me 15 years ago and I look way better. And I said I went from a low relative strength handsome index to a very high relative strength handsome index. And if you add wealth to that, oh my God, I'm off the charts right now, JC. You combined fitness, wealth, friendship, kids. I'm at all-time highs. All right, see you guys.
New all-time highs are not evidence of a downtrend, Howard.
Don't short Howie. Although internally, I'm always hedged. I'm always shorting.
You're like the Eli Lilly of friends of mine.
Eli Lilly, we're going to bring that up. Riley came up with some great work with Phil's help. Anyways, what a treat. We have Michael Parekh, smartest guy we know, that combines, quickly. I don't know. How many years at Goldman Sachs?
20.
Mike, 20? 20 years at Goldman Sachs. Saw the original bubble, semiconductors in the early 90s, internet, late 90s. We're seeing much the same kind of boom right now. He's come out of hibernation, bored by crypto. I used to talk to him during crypto. He's like, never hated it, just And because finance is not that sexy or interesting to him, technology is. And so we're going to talk AI, talk some Google maybe, talk some Apple. And then we had maybe talk, and I'll leave it up to Phil. Phil, take it away.
Michael, what's up, buddy?
How are you, Phil?
Really good, really good. I just want to get right into it because you sort of dropped a frickin' bomb the other day on your Substack in terms of how to model and how to understand the value stack. And so much is happening so quickly. People don't understand it. They hear things, they get fragments. But to have a structure where you can model something and where you could say, and where this is cultivated. So let's get right to it. Let's take a look at this. I went all the way down to that AI tech value stack. It's like the fourth or fifth chart in this article. And why don't you say, first of all, a little bit about the derivation of this, like how you, because this isn't just out of nowhere. This comes from work you've done in the past and ways you've looked at technological innovation in the past.
Sure. This is something that I've been using as a framework for over 30 years, looking at every technology wave, PCs, internet, AI are the big ones right now, but there are a lot of smaller ones like cloud and mobile and so on. And generally speaking, tech stacks are, every engineer, that's what they learn, right? You start with the hardware and the software and then the applications to kind of keep it simple. In this case, I broke it up into 6 blocks, starting with chips, which everyone knows is critical for AI. NVIDIA just surpassed Microsoft, Apple to become, for a moment, the most valuable company, $3 trillion plus. And then you have in here, number 2 and 3 boxes are the core, the software, the large language models, and then the cloud data centers, the AI cloud data centers where you host the stuff. Those 2 boxes alone are going to see over 100 billion or more invested by at least half a dozen companies in the US and another half a dozen or more in China and another half a dozen around the world. And then you have number 4 here is a very different addition. We didn't have that in the PC and the internet cycles, which is data. Data is the constant fuel that makes AI models do what they do. And there's a huge amount of technology innovation that's going on literally every week, every month in terms of how this happens. And we can go into the weeds there, but it's the critical secret sauce here for the AI wave versus every other tech wave. And then number 5 are the tools, the frameworks that, all the software mechanisms that you need to make all this stuff work. And then number 6 is the Holy Grail, the one on the right, top and to the right. Those are the applications and services that today hundreds of millions of people are using. In the next 2 to 3 years, billions are going to be using this. Of the 4+ billion people who use mobile phones, everything that we use on every application is going to be AI enabled. And that's in the 6 boxes. The reason this thing is in a staircase is that about 25 years ago, I moved it as a staircase from vertical to this way. And that way, we get the time dimension at the bottom, and then we get the thing that we all care about, which is investments. The companies here, what are the revenues? What are the margins? What's the profitability? Generally speaking, the bottom boxes tend to, over time, 5, 10, 15 years, tend to be the lower margin companies, because the customers on top basically press them down on their revenues and the cost of goods and so on. And typically the higher margins, higher growth, the longer term values over time, once the platform in, whether it's PC or the internet, now the AI is built, that can take 5, 10 years. The number 6 is where the biggest applications are. In PCs, it was Windows. So Microsoft became one of the biggest, most successful companies. Bill Gates, the richest man at the time. Internet, obviously, Google, Amazon, so many others, Yahoo for a while. And now number 6, it's an open question, because remember, even though AI has been around for almost 20 plus years in various forms, the current one that we're talking about, generative AI, large language models, it's only in the last 6 years, but last 2 years since ChatGPT in November of 2022, took off. And that's what was the starting gun. And already we're over $200-300 billion in investments in the picks and shovels in the first 2 or 3 boxes. And that's where we are. It's going to take 2 or 3 more years before we start to see where the value creators and the applications are. But this is a faster moving technology value stack than I have seen in any other way before. The innovations are happening at 2 to 3 times the pace. And right now it looks like that pace will continue at least for the next 3 years. And I can walk through that in terms of what's called the AI scaling laws, which I've written about. So that's the framework. I hope that helps. Sorry for went a little long.
No, that's
it's not long. Yeah, Phil, any other questions? I mean, I have a million questions. We won't do them all today.
Go, Howie. I have them too.
Well,
just
the
go.
data one's interesting because I think that's what makes this boom different, right? Is no one knows exactly. Like even at Stocktoberfest, Phil and JC and I and now you even has been on the board before. It's like you have 16 years of data. No matter how much technology you build, it'll be interesting when we run all that on the data, right? So we didn't have that, like you said, in the first boom. It was just PCs, right? Or it was chips and PCs. It was very dumb. It was, obviously smart, but very dumb relative to an era where people are chatting and talking all the time and sharing ideas, etc. So I assume it's chaos, but it's also opportunity.
Totally right. And the one thing I would just want to underline on data is there's a saying going around that data is the new oil for the AI wave. And I want to clarify that. It is oil in terms of fuel, but it's extraordinarily unique for every application. That you talked about Stocktoberfest, the way you're going to be able to use data in Stocktoberfest will change dramatically and for the better in terms of the kinds of things you're going to be able to do over the next few years, just because the way the technology works, and I can go into the weeds on that. And that goes to our personal information. Apple, 2 or 3 weeks ago at the developer conference, essentially changed the whole AI industry on its head. Basically, finally did what people said they could do. They have data that they have data for over 2 billion Apple device users. And they're of all the Magnificent Seven companies, they're the ones who built a reputation carefully over the last decade or so that they are the number one steward of privacy. And what they did 2 or 3 weeks ago is basically said, we're building to the developers, we're building an AI cloud and AI on your devices that is going to religiously, privately leverage the data for users without them ever having to worry about that they're going to be the product, that we're going to use that data and steal it or use it for the broader language models. They did something very unique. I wanted to highlight this data piece because it's where a lot of the value and innovation is going to happen. And when we look at companies and stocks and new companies and old companies, this is the one that we got to keep looking back over and over again to how it's being used. There's going to be a lot of technical weeds here, but it's very, very important. I just wanted to underline that.
Sure. I mean, JC, Phil and I know from relative strength data, right? Like people think about data and they go, oh, Facebook's stealing my data and Apple's stealing my data and Google's using your data. I think of it as a dumb person, right? I'm not interested in what you look like or smell like or your size or your weight. I'm interested in the exhaust, right? I think Apple is trying to say that in their ways. Like, I don't care we just have your data. We can anonymize it. It's just the exhaust of all this put together over time. So for Stocktoberfest, it's not about what you said. It's about how many people are saying it over time, right? And then you compare it, like we're working on this, JC, we're working on this with Riley, there's relative strength, weighted relative strength, right? There's been all this data used in the market around prices, but now we have this potential, not just prices, we have a new input, which is social, relative data, right? Which is, we don't know. It could take 30 more years. But the fact is, if people are openly, we're not forcing people to share this. So it's just their daily workflow, which adds a whole new layer to this is what I call the degenerate economy. We don't know all the layers and applications, but once people have the tools like the Robinhood and the Coinbase and the chart products and YouTube and Twitch to like communicate all this, then you throw in the social exhaust and all the tools we built for pricing, just prices. This is just the stock market. I'm not talking about sports. Sports and finance are probably the two biggest areas outside just Apple's human data, medical. I would say medical will probably be the biggest one, right? And then sports and finance have always been, like, if you look at Yahoo with sports and finance, right? Phil, we were there on sports and we were there on finance. If you look at Yahoo today, what are the two biggest verticals? They survived and they've thrived, sports and finance. I think the new one, and Google did this too, this week with their health data, is going to be health, right? Like if you're rich, you want to live. So I think trouncing sports and finance will be health, because like you just said, the stack of apples about your watch and your AirPods and what you're doing. So is that true, Mike? Or is there any...
So the categories you talked about, healthcare is obviously going to be very, very large. It will take time though in healthcare, because healthcare is extraordinarily regulated. So there's a lot of regulatory capture. There's a lot of specifics to healthcare broadly and then in the verticals. But no question that the amount of data that is totally an exhaust is just beyond massive in healthcare. We tend to go to the doctor only after we get sick. So the majority of the healthcare system is only after we get sick. And we know that 70-80% of the time, if we capture the data and warned ourselves or the systems, our friend. Right now, our friends warn us. They say, "Don't eat this, eat that. Don't drink this, do that," and we ignore them or we listen to them. These systems, the data is now going to help us get better and actually do a lot more about our healthcare before we get sick, and that's always being talked about. But the AI systems that are coming, especially the voice-enabled systems, they're going to talk to us and they're going to help us, not in a nagging. We can set it to nag and set it to be helpful and so on. But the amount of help, basically free, we're going to get from the data of our everyday living to help us live better lives is going to be much, much better. So healthcare is very big. But I love your theme of degenerate economy because everything, there are three things in life, right? Health, wealth, happiness. And degenerate economy, the wealth and happiness. It's if you want to gamble, if you want to do speculate, whatever. The data there is massive, and the data there that has been pumped out and refined to use. It's barely started in the economy over the last 50 or 60 years. AI, generative AI, allows you to take that stuff and create entirely new applications that we hadn't thought about, just because we didn't have this way of using technology to create probabilities to understand what's going to happen in sports in the next game, what's going to happen in finance, the next stock market, etc. So we are at the beginning of how we can rethink and let our imaginations really create things in our everyday passions, degenerate or otherwise.
So Apple was really smart. For the past 3 years, they've had so many commercials about security. They've just been pounding it into our heads that they're the safe choice for us, with this idea that this coming data wave was going to make security even more important than it already is. And so they were actually smart there. You got to give Cook credit. That's the case. I see you nodding yes. Here's my question. Did they leapfrog when they're talking about applications, right? And so I'm looking at your stair step here.
Box 6.
And they're already getting into the application layer, or the application, the application part of your model here. Did they just sort of jump over everybody and say, hey, you could just start using this stuff now? It's not a toy anymore, or it's not speculative, or it's not NVIDIA and things you don't understand.
Correct. No, I think Apple did what they should have done, and contrary to the view that Apple was behind on AI, what they did at WWDC showed us that they've been working on this very hard and investing very hard, at least for the last couple of years. They said that they basically created dozens of language models that mostly run on your phones and iPhones and Macs. And they do dozens of things with your personal data without this stuff ever leaving your phone. As and when you need a little bit more processing outside the phone, they created a whole multi-gazillion-dollar cloud called the private cloud compute, where all the additional calculations can be done and brought back privately. And then, as and when you need the broader large language models that the other companies like OpenAI and Google and Meta are spending billions of dollars on, with your permission every time, it will go out and make those queries for you. But they turned the whole world of large language models on their head over the last couple of years, using their own silicon, own chips, own software, own ecosystems of all the half a dozen plus operating systems, Mac, iPads, iPhones, Vision OS, Watch, etc., and created very customized apps that they already had and made them AI powered. So, Howard, to your point on finance, the Apple Stock app is going to do some amazing things relative to other things over the next little bit. And the most important thing from WWDC, they opened up APIs, application programming interfaces, for the million-plus developers. So Stocktoberfest, anybody who wants to leverage the Apple ecosystem can connect to these Apple LLMs and create new AI applications with privacy in the Apple ecosystem. So this, for the first time in over a decade, is one of the biggest opportunities for third-party developers around the world to create AI-enabled applications and services in box 6 on that chart. And that didn't exist before. You couldn't do this on OpenAI's ChatGPT. You could barely do this with some of the stuff Microsoft has, because Microsoft doesn't have a phone ecosystem, as you know. You couldn't do this on the Google's Android phones, because Android phones are fragmented. Hundreds of OEMs make Android phones. The majority of them are in Asia, in China, etc., where most of those companies don't touch Google once the Android app is concerned. So there is no one else who could do this, the local processing and the on-prem processing. And then the biggest advantage they took key focus on is that if you move all the applications and the processing to local data and local applications, you're moving the compute and the energy consumption to local devices. So over the last couple of years, 100% of all the AI calculations have been happening in the cloud. And that's why all the power industry and everyone's freaking out, because the power demand for these data centers is growing exponentially. Annual power infrastructure in this country and everywhere else grows 1 or 2, 3%. The demand is now 10, 15, 20% a year. Cannot be done. So by moving a lot of that computation load to the devices, you're going to use local power plugged into your homes and offices and so on. And that is a big bonus of this. So Apple really turned the whole AI thing on its head literally over the last 3 weeks. Now, having said that, there's a lot of building to be done. It'll take another year or two before we see the fruits of all this. Developers have to do stuff. Most people will have to upgrade their phones and devices, not just Apple, but everyone else. And it's not about Apple wanting to get people to upgrade these devices. It's just that even on these devices, you need huge amount of local GPUs, neural processors, loss of memory, and most of the iPhones today don't have that. And by the way, Android phones, and for that matter, Windows and Mac PCs and so on. So there's a big upgrade cycle for the whole industry, with Dell, etc. And that's been, as JC would point out, that's already been reflected in the stocks up and down.
And like you said, Apple has pricing power here. So it's like, you don't want to be a semiconductor. You want to move towards box 6, because in the end, if you want to be an Apple's phone, you're going to have to play their game, right? They have the pricing power. Right. So that's where I still think when you were on the show the first time, it was 4 months ago and Apple was underperforming, and you talked about, well, You'll be surprised what happens. So then a lot of people said, well, the news, when it broke out, people thought that was the news, right? Sell the news. And I'm saying, no, digest this news, because this is just the beginning. It was Apple, playing their long game. And so a lot of people then think, okay, well, now you know. Well, now you don't know is what I probably think, is because Apple just kind of, as you said 4 months ago, was building, right? Microsoft was early. I think their plan was genius, the Microsoft everywhere, right? Like they don't have the phone, so they have to be everywhere, right? Everywhere else. And so Satya did what he could with the hand that he was dealt, which is invest in everything, become an ETF of AI early, right? So he's got the mind share at least. But Apple, when you have Apple and Google and they control the devices, they're in the driver's seat, at least for the time being.
So I don't want to make it super Apple focused, in the sense that I think, JC, you had a terrific tweet an hour or so ago where you talked about, how all the big tech companies, have once they hit a high, they kept going because each one took advantage of their core opportunities in AI from their vantage point, and the market realized that. We saw that, obviously, as you pointed out in your tweet. I don't know if we can put it up. I thought great,
because the way I look at it, and having Michael's opinion here is great, because he looks at it from a bottoms-up perspective. I just look at it from an asset allocation standpoint. I see Amazon back at those former highs, and I don't care. I don't know anything about AI. I'm sure everything you're saying is right. I mean, you're way better at this than me, so I defer to you. But I look at it from a portfolio manager's asset allocation standpoint. I want to look at the brothers and cousins and all of the stocks that get grouped from an allocation standpoint, that have allocation correlation versus this fundamentals and the storytelling. I want to see where money is flowing. And when I look at the brothers and sisters and the cousins of Amazon, I see Apple got to those levels, consolidated, broke out to new all-time highs. Google got to those levels, consolidated, broke out to those all-time highs. NVIDIA did it first, got back to those levels, consolidated, broke out to all-time highs. Right. Meta did the same thing. So Microsoft did the same thing, all of them. So now that Amazon is in the same predicament and just closed at the highest weekly close ever last week, are we going to make the bet that Amazon is not going to do what all those others did? I'm not going to make that bet. Quite the opposite. I'm betting that Amazon is going to do the same thing that those other ones did.
And I'll give you 5 fundamental bottom-up reasons why I think Amazon has an opportunity to take their core assets and do the kind of thing Apple did, which is redefine them in a way that people haven't thought about. The number one, AWS. Everyone knows that. That's the big thing. This is the largest cloud company out there, twice the size of Microsoft Azure. And number 3 is Google Cloud, which is coming on strong. And number 4 is Oracle. And then there are half a dozen plus cloud AI companies. And Jensen has said, look, over the next 5-10 years, there's going to be $1 trillion invested to redo these data centers. And Amazon is still number 1. Number 2 on Amazon is that they're now just like Apple. They've been very focused on how do we take this data center opportunity. And remember, they're unlike Microsoft and Google, they don't have the dual agenda, which is that Microsoft also is using all the AI, a lot of the AI hardware and software with OpenAI for their own products like Windows and Office and Copilot and all of that piece. Amazon doesn't have that. Amazon, their core business is selling software compute and hardware compute to businesses, which is a multi-trillion-dollar global market. And if you look at their product, they've totally upgraded all of that stuff to the latest and greatest on AI. By the way, they also became the largest outside investor in Anthropic, which is the number 2 LLM AI company after OpenAI. And they're very much in the horse race as well. I just want to highlight, I wrote a post about Anthropic just 2 or 3 days ago. It's the one with the running robot. But basically, Anthropic's Sonnet 3.5, this is the latest version of their large language model, is now, I'm watching the developers go nuts on this, anecdotally, that the performance of this is better than what GPT-4 Omni, which is OpenAI's latest model is. And why do I point this out for Amazon? Because Amazon has the inside access, just like Microsoft has with OpenAI and ChatGPT and GPT-4. They can integrate that a little bit faster into their services for their business clients and therefore their own use. Amazon AWS is doing the same thing with Anthropic's Sonnet for businesses. So that's an edge. It's in the weeds, but I want to just point out that so number one, it's AWS. Number two, they're totally ramping their Anthropic relationship. They also, by the way, changed management at the top to someone who is potentially going to be even more focused on the business AI opportunity that we're talking about. Number three is Amazon is e-commerce, and AI for e-commerce in terms of leveraging all the data that Amazon has. We were talking about data a second ago to enhance transactions is massive. That opportunity, both for their first party sales, what kind of shirt does Phil like? He has a nice beige one today. He might want, red one, etc. Amazon has that data if he bought it from Amazon. I don't know. And also third party, half of Amazon's business on the e-commerce are third party sellers. The opportunity for AI enablement of that is just pretty massive and open ended. Number four is the ads. Amazon is literally the third largest ad company after Google and Meta. We don't think of it that way. And they have the same opportunities to use AI for ad service, personalized, etc., that Google and Meta do. And those two companies are spending billions, and Amazon has that same opportunity. And number five, I will just say, is that Amazon is also revamping, just like Apple is revamping Siri, which is the largest voice-enabled, device out there for AI, for questions and assistance. Amazon has Alexa. They've got over 300 million of these things in people's homes around the world. And they're totally revamping it with AI. I had a post up on this as well. So if I look at Amazon overall on a fundamental basis, they have all three ways to make money as core part of their model. Okay, number one is transactions. They sell stuff, right? The biggest store in the world. Number two is subscriptions. AWS is all about subscriptions, APIs, etc. And Amazon Prime is essentially Costco online. You pay, give them $100, and they've got almost 750 million of those guys. And then third is the advertising opportunity and around APIs and so on. So when I think about it as bulk monetization, it's massive for Amazon on that front.
Go ahead, Howard.
Go ahead.
No, I just gonna say we'll move on to charts because we got to have Michael's got to be a regular. But the next phase, I was just flipping through charts as Michael chatted. If we go look at Pinterest, so if we go look at Microsoft LinkedIn, so the underdog here for Microsoft, okay, health, people don't even understand, including us. Michael's saying it himself. We're at the day, of all the things, we're at the beginning of the beginning of the beginning of the beginning, Game of Thrones of health. Because why? Because of the regulation capture, right? It takes balls and time to take on the government on regulation capture, and United Healthcare and Obamacare and all the fucking red tape. And we have a few healthcare companies, and just when we think they're breaking out, they go backwards. Okay. So we have healthcare. So you've got but if we look at the charts of Reddit, Meta, and Microsoft, LinkedIn to Microsoft is too small, but LinkedIn is going to be super valuable. But Meta, Snapchat, Pinterest, Spotify, Netflix, and obviously I keep telling people this who on the StockTwits team as we have our daily meetings, and you see this, Phil, too, and JC now even sees it with StockTwits data, because we're not forcing people to do stuff. The data is just so rich now that you have LLMs, and it's like, oh my God, when people are doing stuff like Pinterest, right? I don't know the valuation, but JC, if you look at the chart of Pinterest, obviously Facebook's an easier play and it's breaking out. But if you look at Pinterest, it's obvious what's going to happen to Pinterest and Snapchat next. They're perking. This is that number 4 box, right? Where chips are going to do fine still. But if you go to Reddit, and again, I don't know valuations here. I can't talk fundamentally about Pinterest because I don't use it. But that's such a loyal user base. And if you look at that chart, it's been fucking basing and going up. And they're going to be like Spotify and Netflix and LinkedIn, the next wave, Snapchat, Meta, and I look at Pinterest, which is obviously the leader because I think their audience is so loyal. and they do something so unique on the web, and they deal in such an interesting market around homes, design and homes and jewelry and all these things are high margin businesses. This is, like you said, this is like JC just said, this is like you just do the cousins and sisters, and
you like that, huh,
it's
Howard?
easy for me to tell the story because the chart. Yeah, I like that. And I'm watching Game of Thrones where everybody's screwing each other's cousins and sisters, I guess, because there was no Tinder. You dated everybody inside the wall, but I digress. Okay, so Mike, we have to have you to talk about just data and next time and go through the chart. So Phil, let's move on to...
Okay, we're going to move on. I have 2 pages of questions for you, Michael. So it's ridiculous, but I have to ask one. I'm very focused on health, and I know you're talking about regulation, how it's going to take a slow, long time. But there is no regulation when it comes to personal health, right? So it's like there's already so much data. I mean, I can get my heart rate variability. I can get am I sluggish? I can get so much data already on my watch. And I've been leaning away from that because I'm all into I know how I feel. But now the way you're talking, it's like it's go time for me. And I'm going to have to write about this. It's like I've been avoiding quantitative self because, if you have Google Maps, you never know where you are because you're following the map everywhere. But now we're moving beyond that. And so how long are we from this? Okay, here's my question. How long are we away from I'm wearing the Apple Watch and it says to me, Phil, in that Hal voice from 2001: A Space Odyssey, Phil, you really ought to make an appointment with the doctor because there's something going on.
You got to get the Whoop, Michael. Isn't the Whoop? That's the one, right? It's not the Apple Watch. It's the Whoop.
It's, I have to say the Whoop is going to have, I give the guy credit. I'm not a fan.
The kids these days are on the Whoop, Pearl. Step it up, buddy.
Yeah, no, it's going to be the Apple Watch is the way I'm going to go. I have one. I have a new one sitting in a box that I'm going to pull that I've been resisting. But go ahead, Michael. How far are we? Because you also wrote recently about chatbots and where that's going. They just talk to me. It's I'm sorry, I can't do that, Phil.
Well, it's also Phil, my fridge. We joked about a smart fridge, but how about when I opened the fridge, it said, Howard, you see that apple there? Eat that. That, based on how much carbs you've had today, it's best that you digest this with this or a glass of red wine or whatever. We literally are at least. I used to joke about what do I need my fridge to talk to me?
You're going to have steak.
What you need, a wine pairing. Well, the number one thing it should do is idiots like you, JC, who have this aloof status of whatever consigliere of wine. I should be able to get that automatically. So yes, that's one.
I'm sorry, I'm so good at blind
and what gel to use.
Wine. Maybe I should suck at it more.
What gel to use on my hair would be important. It's just like a maze of gel.
Okay. So, Michael, how long? Do I need to put the watch on, right? I mean, that's kind of where we're going.
Well, we are within this fall. Apple, remember, the Apple Watch, I think you pointed a key part of, again, the Apple arsenal. This is the largest watch platform, a wearable platform on the planet, multi-billion dollars. This would be by itself, the Apple Watch by itself would be an S&P 500 or 100 company by itself.
Wow.
And we're on to the 10th iteration. The next one that is coming in September, along with all the other iPhone 16, etc., it's the first major redesign. They are going to double and triple down with AI processing on the watch. The rumors are the batteries are going to be bigger because the processing for AI is going to be even more local. But you are totally right, Phil. The amount of information it has access to with all the sensors that it's on the thing, you're within about 18 to 24 months. In terms of, hey, call your doctor about this kind of thing. But even before then, in terms of all the things we consume, food, as Howard talked about, what's in my fridge, etc., we're going to be able to do that with our phones, not just Apple, but Android, etc. I mean, a lot of demos have been shown at the developer conferences. You'll be able to point this at your fridge. You'll be able to point it at your table when you're having dinner or lunch with your family. And it'll tell you with AI, with all the local data about your health, hey, you should have a little bit more of this, a little bit more of that, and so on. So yeah, we're very much on that. And then since we were talking about a lot of these companies, I'll even bring up Amazon again. Most people forget. Amazon made at least 2 multi-billion-dollar acquisitions in the last 3 or 4 years. that are going to be transformed by some of the stuff. Number one is One Medical, which are these clinics that are hundreds of them around the country, and these are relatively straightforward. I'm a customer here.
It's kind of like their Apple Store. It could be like their Apple Store, but for health.
Store. It is their Apple Store in a way. They've had some teething problems in terms of management of this stuff, etc. But the core reason I'm bringing it up is because they're not necessarily tied to health insurance. You can go in and for $100, you can get a subscription, a relationship with doctors as you need them. And Amazon potentially has a play in this as well. Number two, Amazon Pharmacy, which is the other thing that they have, which we don't remember. All my pharmacy stuff has moved to Amazon from the Walgreens and the CVS. Why? Because it's
mine
easier.
hasn't. That's interesting. Okay.
The thing knows what I have. It's sending me notifications on, hey, you want to get this renewed. You need to go check to the doctor and get this approved. Walgreens has never done that for me. CVS has never done that for me. Those are fragmented. And Amazon has 300 million of these things. They're going to tie it to Alexa. So health, I'm going to break up health into two types. Health with a capital H, which is the stuff after you get sick. That's 20% of the US GDP, 10% in Japan, 10% in Korea, etc. We spend double everybody else, but only after we get sick. That's the one that the government controls. But then health with a small h, which is what, Phil, you're talking about. Well, what am I eating? What are you talking about? What should I eat in my fridge? That's the health before you get sick. That's the stuff that it helps you live your life a teeny bit better because it knows about you. It knows what you ate. It knows what your pulse is. It knows what this is, what that is. And it can give you small little nudges and signals, not in a nagging way, to help you. That's the big one.
That's the nudging that I want. It's like right now, it's like the Phils of the world, the Bill Maher's, the people that are living this cleanly, because they know what they know. Give them credit. It's like Barry Weiss going from hard left to center before everybody, right? To the victors go the spoils, right? And the spoils here were, I'm going to live longer. We look at those people like Phil with a queer eye saying, fuck you. But soon it'll be for everybody, meaning it'll be quiet nudges where it won't be like your friend who quit smoking bugging you. It'll just be your phone saying, hey, man, I saw a sign I went, with my son and vaping, it makes me nauseous because I can't, he knows it's bad for him, right? Like they know, right? It's not like he doesn't look up what it's doing to his brain. They're not that stupid, right? People, you know what I'm saying? Like, but it's got a grip on them. So you go to the Vons, and at Vons it says 1,200 people a day. When you look at the cigarette thing, 1,200 fucking people a day die from smoking. It literally says that above the place that you're going to buy. Still doesn't get the results. So I think if that doesn't work, it's going to be your watch or your alter ego that talks to you quietly and says, you can do this, Max. Like, it can't be your parents. There's books called The Addictive Personality that I'm reading, Phil, that are like fascinating, but you can't make your kid read that book. They can look it up and they can see what their lungs are going to look like. They can see what their brain development's going to look like. I mean, JC is going to have this. He's got 3 little ones. So he's got all this degeneracy that his kids are going to have to deal with from the iPad to YouTube, forgetting vaping and social media. So there's never been a torrential of degeneracy that these kids are going to have to wade through and make incredibly informed decisions at an early age. So anyways, okay, we got to move on because
let's move on.
There's also a social element to this. I just want to point out, I'm sorry, it's not just individual nudging. It's because we trust our Apple ecosystem, my family, your family, most people's families are
because it's our data. Because it's our data.
With your permission, it'll share it with your kids and spouse and so on. And they can help nudge with, and they give them the data if you give them the permission to help remind you of this stuff, right? So there is an ecosystem. We don't think of this as a social network, Apple, but there is that element here. I just want to point that out.
Yeah, and I will say, bring up one stock that you could pull up, Life 360. We were the seed investor in that company.
I was just thinking about it.
Yeah, so Life 360 is a company that went public in Australia. LIF, JC, is a friend of mine. We were the seed investor. We sold it because your kids are going to be on and you're going to be on. And obviously their main competition theoretically is Apple, but it's a $2 billion company. So why does Apple care about a $2 billion business, right? It's this really fascinating story. He's going to speak at Stocktoberfest too, Chris. So we were a seed investor. It's taken him like 15 years. but the company's just getting started because they've built their kind of own social circle for kids and their parents and sharing location data.
At one of these Palooza things way back in the day that you invited me to, like a long
because he spoke at it. Yeah, because he spoke at it. And so anyways, think about how full circle that is.
And how they earn their trust. They earn the trust of all of their users over 15 years. Because normally, when the business was launched, I remember looking at them. It was like, oh my God, this thing is going to track me and my family everywhere, and they're going to sell the data. And 15 years later, anecdotally, most of the families, my sister, her family uses this. They wouldn't. It's like as critical to them as messages.
I'm going to have him on. I'm going to have him on the podcast. There was a period like the TikTok during COVID that the kids, just like the LGBTQ for Palestine, they did a practical joke and like scared the shit out of the company because they went on TikTok and said, fuck this guy. And he had to go like save the brand, even though they were just fucking with him because it's an amazing story. And now a $2 billion company, they bought Tile, which was expensive, but very interesting as well. So data, anyways, all right, let's go to JC and the markets. But Michael, that was eye-opening as always. Jesus. My brain's all right. Let's go to JC. Phil's refreshing. JC, bring us top down what we see.
So Bitcoin's at the lower end of this range. So when you hear BTFD, that's cute and it's a fun meme and everything, but what does that actually mean? This is that, right? If you're looking to BTFD on Bitcoin, we're at the bottom end of this range. So you can make a bet that this is a massive top. This is a double top. Pamela Anderson laying on her back is what we used to call this, just like, right? Like, is that what this is? Just a massive top? Or are we just on the lower end of the range and this is where you buy the dip and then we go? And I'll talk to, you could look at consumer discretionary. You could look at Apple. You could look at Google. You could look at Walt Disney, look at 3M. You could look at things that look like massive tops within this bull market that, as it turns out, have not been that because it is a bull market, right? So we argue that Bitcoin is essentially part of the Mag 7. It's just another massive tech stock, a trillion-dollar technology company in the same sphere as Amazon or Google or Apple or Microsoft or NVIDIA, and it's part of that category. And all of the altcoins are essentially part of that industry group, but Bitcoin is one of the big ones. So like some of those others, you could bet that this is a massive top or this is where you buy the dip. I think if you're above 60, I think you're fine. If you're in the 50s, I think there's either more downside or more sideways consolidation, but I think above 60, I like it from the long side for sure. This is Bitcoin. Now, when you compare Bitcoin, which is the quote unquote digital gold, to actual gold, you could see that ratio peaked back in March. And since March, gold is up 7%, Bitcoin's down 16%. Back in March, it took 34 ounces of gold to buy one Bitcoin. It was 34 ounces of gold to buy one Bitcoin. We're down to 25 ounces of gold to buy one Bitcoin. So that has been converging. Gold is also making new all-time highs. Bitcoin is not. So something to keep in mind. And people were like, well, JC, zoom out. Bitcoin has done so much. Yeah, Bitcoin has done great. Also, Bitcoin was worthless and gold is $16 trillion. So it's easier to go up when you are worth nothing versus when you already have $16 trillion in value, right? So also we want to put things in perspective. One is a real asset, one is a rounding error, right? So let's just keep that in mind. And with that in mind, think about how much upside Bitcoin has, considering it is just that. It is irrelevant and nothing and a rounding error at best, right? It's $1 trillion versus $100 trillion stock market, $130 trillion bond market. Bitcoin is 1 trillion, right?
So the market cap difference between gold and Bitcoin is 16 to 1.
Roughly, shrinking.
Roughly. A little
it was
less,
higher.
Maybe 15
it was
or
higher.
So, but yeah, ballpark.
Yeah. But that's why it's boring, right? Like I get why people like it, but compared to what we just talked about.
So go down the cap scale and go scroll down to Solana. And take a look at Solana, because if you're thinking about BTFD in Bitcoin, is this not where you BTFD in Solana? Right at last year's highs, right at support from the spring, former resistance turns into support, scoop down under the rising 200-day moving average and rip to new all-time highs. I could totally see it. We're above 130. We want to be long Solana all day. All day.
Love this analysis, JC, because so many people all the bears are coming out of the woodwork now and mocking Bitcoin and here we go back to zero or whatever. And meanwhile, you're just saying, hey, here's a place to buy. Here's a place to buy Solana. Your risk is very well defined. Under this level, I don't like it. You're selling it. Above this level, I do like it. You're buying it.
Bitcoin above 60, you own it all day. Solana above 130, you own it all day. And to your point, people are bearish at the lower end of the range. These things have sold off enough to get people bearish. That is perfectly normal and a classic characteristic of opportunities to BTFD. We've seen it time and time again.
I will also add a little bit of storytelling to this because I'm not that interested in crypto, but I am interested in meme coins because it's better than NFTs in my opinion because there's true value in creating them, not for them to go up per se, but as a use case versus NFT. You only hear people ridicule meme coins and which is great. NFTs I just never understood because of the term. I hate all the terminology, but meme coin is
NFTs
just so young and fun.
Non-fungible.
But
by the way, NFTs are non-fungible.
No, I'm just saying.
The floor price NFTs are
I love the idea of fungible.
Yep.
I love the fungible thing. It's so stupid because
NFTs
it's fun.
are fungible, so it's no different than a meme coin.
Okay, but what I'm saying is this goes to my degenerate economy. We've reached grift exhaustion, right? Which is bullish for this industry, right? Everybody who wanted to grift has made a fortune grifting, whether it's Kevin Rose or Chamath or me. I don't grip, but I'm saying you could, whatever you say, I've made a lot of money in crypto without even caring. I followed Yoni and I followed Fred Wilson. I mean, meaning Fred's not a grifter. I followed Yoni, who I met in 2010 and said, buy crypto. Now we're at the phase where it's not just Bitcoin, meaning I can see Stocktoberfest having a meme coin for its users that care about maybe owning the most meme coins of Stocktoberfest and having special privileges. Not because I want meme coin go up, but because there's a young
it would be
population.
A utility token.
A utility, meaning we're finally at the phase I call grift exhaustion, where it's not even fun to grift. Go grift. If you want to grift, it's a global thing, right? Like you're not getting, it's like smoking. You could warn people that 1,200 people a day are going bankrupt from grifting and they're going to still come back to the casino because the rails are good, the network's good, the tools are good. So at grift exhaustion comes grift utility, which means people like me who were scared to go into the industry because I'm going to be associated with grifting now have to really think about explaining to my users like Apple does with security. I have to build a brand around non-grifting, right? Right from day one. Whereas Doji will never get over the grift thing with Elon Musk going on Saturday Night Live and fucking the thing. God bless them. They led the path to this. But you're really going to have to explain to people why you're doing it, the supply. Meaning, it's like when Madoff made it harder for hedge funds to raise money because Madoff was a criminal. Okay? That was a tax on all of us. Why I got out of the hedge fund business, right? Probably for good reason. But I'm saying it was a tax on people that were trying to do good work because he was a scam. So you probably are a scam. And so all we did with crypto is move to a universal assumption that everybody's Bernie Madoff. And yes, most of them are. But now we've reached the point where utility with Solana and meme coins and pump.fund and some new stuff I'm investing in and seeing every day around new pump.fund type models is just happening. You don't have to like it, just like you don't have to like the warning labels on tobacco companies. And the warning labels will exist as they should for social media, but it's coming. So that's where I feel we are with crypto.
Elon Musk, because this is just a classic characteristic of what Phil was just talking about with Solana and Bitcoin, about how it's sold off just enough for the bears to really get going. Tesla went from 30 billion to 1.3 trillion. And has had a well-deserved consolidation since then, corrected about 61.8% of that, about 2/3 of that entire rally, and is now making new 4-month highs up over 30% off the lows. The rotation into consumer discretionary is real, guys. Amazon represents 25% or so of the entire consumer discretionary sector, closed at a new all-time high on Friday. Consumer discretionary was down for the year like 10 days ago. Tesla is the second largest component, 14-15% of consumer discretionary, well-defined risk. After multi-year consolidation, the risk reward was there above 165. We're already at 185, making new 4-month highs. I think a new all-time high is coming, and a next leg higher, sending Tesla potentially. And again, I don't know, but this has the potential to be the most valuable company in the world, right? It only needs to get to 3 trillion. And we've seen that these things happen. And the fact that Tesla already did what it did and has consolidated over the last few years, I wouldn't be surprised at all if Tesla was a $3 trillion company or a $2 trillion company, or either way, getting back to those former all-time highs and doubling from there, which would get it to 3 trillion. I think that is absolutely in the cards. And I think against 165, like I've been saying for the last couple of weeks, you could be long all day. The risk is in not owning Tesla, in the same way that the risk is in not owning Bitcoin, in the same way that the risk has been not being long stocks in a bull market. I think that there's far more risk for investors to not be in Tesla than to be in it or not owning enough. I think there's a huge risk there.
Hey, Michael, one of the questions that I had for you earlier was about Tesla, actually, and their AI strategy. And is that legit? Like, are they in the race too? A part of the I mean, if you look at the Mag 7s, they're all AI, and they're part of the Mag 7.
No, thanks. I by the way, JC, your charts were tremendous on all of them, and Bitcoin. I don't pay as much attention to, and on Tesla in particular. On Tesla, Phil, I've written about AI and self-driving cars and FSD, which is Elon's big thing, and the version 12, which is true generative AI-driven self-driving car technology from Tesla, versus the previous generation before version 11 that were more traditional coding. The core thing on Tesla on AI is that they do not, this self-driving is still a very tough place, because if you look at where the technology is in terms of how the government rates this stuff, FSD, the latest and best from Tesla, is still what's called level 2 or a 5-level scheme. And we talked about this last time I think I was on, and the best self-driving systems that we're seeing in China, Mercedes in Europe, etc., is maybe level 3. And so my point, Phil, is, Elon has a lot of opportunity, and he's very, very good at promoting this in the context of self-driving cars, but it's not still about 3 to 5 years away before we get to level 4 or 5. For a whole bunch of reasons. We can get into the weeds of this. So, and then obviously the second leg to the Tesla story is robotaxis. He's got a big investor show and tell day coming up in August in terms of arguing about robotaxis. And again, the robotaxi piece is also a little bit longer, in my view, looking at the technology on a bottom-up basis. And I can go into the weeds, that it's going to take a lot longer. He is pointing to that next new shiny thing, because that gets him a lot more, it refuels the whole set of believers that are in Tesla on a fundamental basis in terms of so on. But it's probably going to take, technically, it's going to take a little longer. Third thing I'll point out is that he's also focused on robotics, is Optimus. And that's another piece that the sell side has been talking about. And he's been very, very good at announcing it with a dancing guy in a robot suit 3-4 years ago, and now he has robots that do stuff. But again, that market for robotics, it's called foundational robotics, which is using LLMs in robotics in the physical economy, is again a multi-year opportunity. It's not going to pop in a business context in the next year or so. Again, a lot in the weeds, and I've spent a ton of time, we can talk about that. So those three things I would highlight for Tesla on the AI side. And then on XAI, which he keeps moving NVIDIA chips from Tesla to his XAI and Twitter and so on. And that is all fine for the reasons he needs to do. He's getting his compensation package through the Tesla board, all of that stuff. He's doing things that make sense for Elon Musk, and Tesla shareholders are relatively secondary in that equation. And the biggest scarcity today is processing. Everything I've talked about in the first half of the show, you can't do any of that without literally hundreds of thousands and millions of chips from NVIDIA in the next 2 years. And as excited as investors get on Tesla in terms of their self-driving capability and their technology and FSD and so on, doesn't mean if Elon has moved 100, 200,000 chips from Tesla to SAI, that's a meaningful 1 to 2 year step back for Tesla in its AI ambitions. So I just want to highlight that.
One more thing.
And
I will leave you guys with one more thing.
Sorry.
One more thing. Sorry to pivot, but I do want to get this out there because it's all, I know this is all about tech and, and I love it. By the way, I love this conversation. I love learning from Michael. I've been listening to Michael for over a decade, teach me about stuff that I don't know anything about. But I wanted to throw this curveball out there before I leave. And small cap stocks have underperformed so much, and everybody knows, and they're terrible, and da-da-da-da-da. Do you know what the best performing sector, small cap sector, best performing small cap sector since March the 1st is? Do you know?
Banks?
Financials.
Regional banks.
Throw it up. Throw up that
interest rate driven
performance since March.
Look at Goldman. Look at my Goldman all-time highs. Look at Michael's secret handshake alma mater. It is a small cap compared to Square, compared to like the idiot, like in a way, compared to like their ability to gouge margins.
I love you, Howard. Goldman Sachs is a Dow component. It is not a small cap stock. But yes, financials, believe it or not, Goldman is a $150 billion company. So all these are small regional banks. Best performing small cap sector since March the 1st. And I'll leave you with one name. Scroll down. This is New Holdings, NU. This is Brazilian. Maybe you scroll up. Sorry. This is Brazilian regional bank, NU. My suspicion is, and I'll let you guys tell me, my suspicion is they're not just a regional bank. They got a lot of mobile payment processing.
Well, they're a neobank.
They got something else going on.
They're in part a neobank.
Making a new all-time high. Right. As we're recording this, look at this multi-year base. Looks very, very interesting. Above 12.5. I think you could buy it all day. I think you got 50% of upside at least. The relative strength here is screaming hot. Financials, a leader in America since March the 1st. And this one right here, coming from Brazil. Keep on your radar. I love you guys. Michael, great to see you. Pearl Dog, Phil, Lean Zone.
Adios. We'll get to aerospace and defense next week. And we have a couple other quick things to cover without JC. We had planned on getting to the some of those defense stocks too, but let's just do a quick trends with no friends. Cattler, I think that's how you pronounce it. I don't even know. Thing has 8 followers on StockTwits. When we first covered it, when Riley first touched on it in May, it had 0 followers on StockTwits, which is hilarious. Like, this thing is just so neglected. And yet, look at the chart. It's ridiculous. Offshore wind power installer. We talked about it on May 21st. It's up another 15% since then. I mean, I don't even know what to tell you. Well, do your own due diligence.
Two of the bigger name stocks that we'll pull up with trade. We're working on something with you, me, and Riley about relative, Michael from his Goldman days, relative underfollowed strength, which is the 2 names that pop up to me are Broadcom, AVGO, relative to any chip stock. No one ever mentions it, right? It's Google's partner. And the other one being Eli Lilly in the medical space. Like, no one's talking about a medical company, a drug company becoming $1 trillion company. And Eli Lilly, for all the coverage Apple got on its way to $1 trillion, and NVIDIA's coverage on $3 trillion, that's a pretty fucking, there's no 80% drawdowns along this run from this triple, right? So quietly, relatively, which is something we're working on, is just the relative strength of followers. compared to price, right, Phil? So Lilly and Broadcom are like two incredible companies in the right sectors that no one talks about, that are incredibly big companies, incredibly diverse companies, incredibly rich companies. So that's something in Trends with No Friends that we should talk about. Lilly is going to be an amazing company because depending on how they invest this profits from all this, the fat pills. So there's just a lot of, this goes to indexing too, guys, is why I like it. There's no way I would have owned Lilly because I don't use the drug. I don't understand it's, like any trend that I'm not involved in. It's hard to own unless you're indexing, because you would never have rode this thing the whole way up without it being indexing. And that's the beauty of indexing. You end up owning an Eli Lilly, which you wouldn't have owned, or a NVIDIA, which you would have sold. Because I know, Michael, you like NVIDIA and 900% ago, but how do you hold a winner 900% if you're not really sure about the technology? Will you hold it through an index? All right, Phil, anything before we go? Because I got to hop too.
Yeah, just really quickly, I have a little health tip for you guys. This chart is making the rounds with daily social media users in adolescents and anxiety prevalence in the 18 through 25 and percent of U.S. undergraduates with mental illness, anxiety and depression, and girls, adolescent girls hospitalized for self-harm. This is correlation, right? And so there's a whole bunch of people out there that are like, you can't, this has nothing to do with phone use just because, or social media use, just because these two charts are correlated with each other has nothing to do with causation. We have no causative proof. And maybe you're right there. Maybe that's correct. But I will tell you this, that this thing is sucking up a lot of our attention. And we all have a weekend. And for those of us who are parents, especially, our kids watch everything that we do, right? They see us and they model, we are modeling behavior for them, and they copy what we do. And I can't recommend enough to everybody watching this, whether you think these charts are not causation, where there's no causation here or not. I can't recommend to everybody enough to, you get to the weekend. This is going to come out on a Thursday afternoon, right into Friday. Digital intermittent fasting. Get out in nature. It's a gorgeous time of the year. If you're in the Northern Hemisphere, most people watching this are. It's a gorgeous time of year. Put down your phone, turn off your notifications, put it in a drawer, put it in your glove box when you go to the park. Get away from that thing for a while and just let yourself be. Let yourself be in nature. Let yourself be with other people and interacting and relating to them. That's all I got.
Everything in moderation. Well, great point.
Everything in moderation.
The good news is, theoretically, is humans will adapt. Like BlackBerry, I never thought it would. That was before the internet, basically. I never thought they could drag it out of my hands. Same with Twitter. I didn't think I could live without it on my phone. 3 days, I was off of it, right? Sugar. Yeah, we don't even talk about sugar. But yeah, there is correlation here. I see it in my kids. So you lead by example. I took apps off my phone. I text and use the phone as a phone and Google Maps. That's it. I've missed nothing. I do my work from my desktop. We have to set the example. So that chart's frightening, and goes to why Apple's probably in the lead, because they don't truly have a social network, and that'll be their next marketing phase when the government puts the FDA warning on every time you open an app. So Apple will be involved in that, but you're gonna, they've kind of avoided buying the Twitter. The other thing, the one prediction I will make is Elon. The reason Elon's stock is lagging Tesla's is it's just a simple, like fundamentally what Mike said, but also he's going to buy Twitter, right? He's got to clean up Twitter, right? Twitter's a pain in his ass. He got dared into it, and he's going to make his investors whole by rolling that into Tesla and improving maps and some kind of services that maybe build a phone, but he's going to clean that up. And I think that's what the stock's waiting for, is like, there's another shoe to drop, just like when he bought his cousin company, the solar company. I think he's going to roll that in and make his investors whole. And I think the market's waiting for something like that. It's a $40 billion acquisition. I think as soon as the stocks gets a little stronger, he's got one more shoe to drop to clean that mess up. But he's got to clean that up before it just takes too much of his time, right? And it's not healthy for him, just like it's not healthy for kids. So I think that's kind of the reason I don't own Tesla right now. I'd rather pay higher knowing that he's cleared that up. So, all right, I got to hop, boys.
That's great. I just want to point out, because both of you talked about Tesla, and JC, maybe you guys can tag it on the next trends, is competition on EVs from China. This is a huge macro issue. BYD, I don't know if you've looked at the stock, etc.
Yeah.
They're selling a $10,000 EV, they call it Seagull. Even with 100% tariff in the US on Chinese EVs and 48% in Europe, they're already making headway in Europe. They're not allowed yet here, but they're coming. And this is going to be an issue for all the auto companies. And Tesla is going to be, in that context, on a bottom-up basis, it's a deer in headlights, because he's not building a 40,000.
BYDDF? BYDDF,
Yeah.
I think, because it's okay. Holy smokes! Yeah. It's it's moving up.
They're
right.
They're going to do to the world what the Japanese did and they started to do in the 50s in cars, and they're
next topic.
Unstoppable.
Yeah. All right, I'm following that now. A chart looks like Tesla in many ways, without and if price matters, then Americans are price suckers.
And there are over a dozen Chinese auto companies we don't pay attention to here, and they're totally. It's the largest auto market in the world, China.
All right, everybody, great one to end it on.
Thank you, everybody. Phil, thank you. Howard, thank you.
Phil. As usual,
see you, gentlemen.
Adios.
Thank you very much.